Welcome to Pepper Shock Media's Marketing Expedition podcast, keeping you up to date with the latest in marketing and advertising. Now here's your host, Ray Allen.
Welcome to the Marketing Expedition podcast. I'm your host, Ray Allen, President and CEO of Pepper Shock Media and the founder of the marketingexpedition.com. And today we have Stewart Enterline with us from Lefavi Wealth Management. Welcome, Stuart.
Hi, Ray. Thanks for having me.
Well, let's just tell our listeners a little more about who Stewart Enterline is. Let's start with your journey.
You're going to make me work, huh? So I'm originally from Erie, Pennsylvania. Erie is a small town in Pennsylvania, and it's the piece of the state that just kind of juts out and touches Lake Erie. So that's where I was born and raised. I went.
Would that be cold? Is it a pretty cold place there?
It gets cold. Yeah. In the winter, it can be brutal for sure, and hot and humid in the summer. So we definitely have all four seasons in Erie. So I was born and raised in Erie and went to school at Penn State. I actually earned a triple major there in finance, economics, and accounting, and it's something that I do not recommend that anyone pursues. But
I think I can trust your judgment on that one.
Right. Well, see, my mom worked for the university, and so I had a 75% discount on tuition.
Nice.
And I've kind of felt that, in the earlier years of my life, I really want to spend a lot of time really learning everything I can. And so that was kind of my philosophy then. But again, I think I was probably wrong and don't recommend it for anyone. I ended up in Salt Lake, actually. Currently, Lefavi Wealth Management is based in Salt Lake City, Utah. I came out here right out of school. Actually, the founder and our president, Bruce Lefavi, he is married to my aunt. So I've known him for about 20 years, and he kind of recruited me pretty heavily out of school to come out and help him with the operation out here. Yeah, I mean, that's how I ended up out here. And I've been out here for 3 years. I really enjoy it. I love what we're doing with the company. And, Salt Lake City, Utah is a very easy place to live. It's easy to get around. It's very affordable. The people are friendly, and you've got a great mix of, somewhat of a city life, and definitely you have the mountains. You've got that whole mountain life and skiing and camping and all that fun stuff. So
right, you went from hills and lakes to mountains and rocks and beauty that's surrounding Salt Lake City. Yeah, exactly.
Yeah. I went from a lot of green and a very different climate to really the desert is where we're at now. So that's kind of how I got from there to here. I don't know if I hit all of your questions there, but
no, you did pretty good. So let's talk about Lefavi Wealth Management. What is it that you do there, and what makes Lefavi any different than the hundreds of wealth management companies out there?
First and foremost, I'm a wealth advisor, so I manage about a third of our clients. In addition, I also act as a vice president, so I really am in charge of the day-to-day operation and work a lot on the overall strategy moving forward. I'm 27 years old, so I've really redefined kind of climbing the ladder, and I'm not boasting. That was definitely quite a bit of luck, as a lot of things in life are.
And you've learned a lot in a very short time frame. But yet you've also modernized things and made it differently efficient, or as just kind of taking from the way things used to be to how they are now. And especially during a pandemic and the work culture and environment that you're doing now. Talk about that a little bit.
Well, I appreciate you giving me credit for that. I'm not sure that that's really the case, but we've got a great team here. We've got a pretty new team, and we're all kind of rallying around the same vision. It's definitely a unique situation. We've been around for 40 years, so that's something that we're definitely proud of. And
there's some namesake there. There's some branding in the name that carries some weight that people know from
right.
The old to the new, right?
Absolutely. It's probably helpful, I guess, to go back in time a little bit and share a little bit of history here. So we were founded in 1980. That was Bruce Lefavi that founded the company. Shortly after he founded the company, he started building a book, et cetera. And I'd say about 10 years after we started. So around 1990, he started to appear on different radio shows. So kind of as a guest, as an expert. He was quite good at it. He's a talented guy for sure. And basically, as things kind of moved forward, he ended up starting his own radio show. And it was every Saturday. It was a nationally syndicated show. Really, he just provided people with some financial guidance over the radio. It was a show where listeners could call in and ask questions. So it was very real. And so that's a big part of where we are now. I mean, Bruce really did single-handedly build this company from $0 in assets to $303 million in assets.
Right. We talk about building brands and bottom lines. He certainly was able to do that with his name and being able to show his expertise on the radio, which now we're doing as a podcast, right? Things have changed, but
exactly. With Bruce, it really was about that brand, and people were really drawn to Bruce as the personality. He's someone that people really trusted. Fast forward to 2020, or I guess let's think about a more pleasant time. So really 2018.
We can party like it's 2018, 2019.
2018 was a great year,
It was.
But so in 2018, that was really where Bruce kind of asked me to play a bigger part in the overall management of the company and just kind of
take the reins, but yet not quite yet, but just, ease into it, right?
Exactly. Yeah. And I skipped something. Bruce is, of course, no longer on the radio. So that was about 2014-ish that he kind of, after roughly 30 years on the radio, he's moving more towards retirement. It's obviously a lot of work to prepare for a live radio show. This is kind of Lefavi post radio in a way. And so we had to, I don't want to say reinvent ourselves, but we had to make a lot of changes pretty quickly. And we'll continue to do so. We are a long ways away from being where we want to be. Several years, but
that's part of the journey and getting there and continuing to build the brand off of the equity that you had previously, brand equity that is, and now really taking shape and form into the future.
At the end of the day, people just want to be with someone they trust, and so we think that moving forward, really our best source of growth, other than of course having you guys over at Pepper Shock, will be just taking great care of our current clients, right? Referrals.
Right.
People aren't going to necessarily walk in the door and give us $100,000 to manage because they drove past a billboard, but they might because their brother-in-law, or their father-in-law, or what have you, a church member, etc., is a client of Lefavi and is a raving fan of what we do, and so. We really, it's kind of really simplified things for us, honestly. It's not too difficult when you really just focus on what you're doing, focus on consistently providing a great service to our clients and providing a lot of value for the fee that we charge. When you do that, it kind of simplifies things. You can kind of almost have tunnel vision into that goal of really just improving the operation and making sure that we're providing a great product that people love. Yeah.
Talking about pricing and fees and structure, you've changed how that has looked from the past, and now you're really just doing flat fees, right? Tell me more. Like, how is this helping you, and how has this kind of changed how things have been done in business in your world?
Again, the industry's evolved quite a bit, and for the better. In 1980 or prior to that, even the way that investment management worked is you had some stranger from New York give you a cold call, right? And say, hey, Ray, I've got a stock for you.
Yeah.
I've got this great stock for you. It's this new company, and they're doing revolutionary things. And really, you should put some money into that.
Right.
They'd pitch you on buying the stock, and they would make a commission off of that.
Right.
And that's just how it worked. Fast forward into the future a bit, and the asset management fee was introduced, which is a flat percentage fee on the assets that your advisor or broker manages. In my opinion, and of course I'm biased, but in my opinion, that's a much better situation for the client.
Right.
We have an incentive to not only keep you here and keep you happy. We know you have other options. So we have not only that incentive, but we have the incentive to protect and grow your wealth, right? Your account, your portfolio, whatever that looks like. First is the commissionable side, where some brokers at least may just want to make the sale and move on. You know, it's really just the way the industry was structured, and it's taken some time for, I think, the entire industry to catch up. And what I mean by that is, you know, there were, you know, even as early as 2017, 2018, you know, still to this day, there are certain providers of investments, of assets that only operate under a commissionable structure. We want to be able to offer our clients essentially anything, right? We want to be able to comb through the universe of investments to find the best product for that client and that portfolio, and et cetera. And so,
and you're not just tied to one specific suite of products. You have the ability to truly look out for the best interest of your client, because now you can truly pick from any of those that are out there, rather than just having to be siloed in one specific, you know, type of investment, right? So you can really look out for them and make sure that what you're doing is what their needs are, right?
Exactly. I mean, we've had some great guys here advising clients over the years, no doubt. And I think that everyone was very much long-term focused, in the sense that, you know, this is a relationship. We need to take great care of these people and ensure that they're invested appropriately. You know, however, I came in, and for me, you know, my real passion is truly economics. The way I explain that is it's the study of incentives. It's not the study of money. You know, it's not really even business. It's the study of incentives. And so, you know, with
people's behavior and how they're going to act and what their needs are to fulfill. And you're right. It's not always about money.
Right. If you want to study how different countries interact with each other, different businesses interact with their customers, et cetera, you have to know incentives on both sides. People are, you know, one thing that we assume in economics, which isn't always the case. And boy, 2020 is definitely the year to show that maybe people aren't always rational.
Right. Yeah. Yeah.
But that's what we assume in economics, is that the people are rational actors.
And hindsight is not always 2020, by the way. Not this year.
No, exactly. You know, and I'm kind of going down this rabbit hole, but really you know, when I came in and knowing that there were certain products, there were certain instances where the advisor, the representative here would earn a commission. I just thought, you know, even though I know we have great guys and really trustworthy guys that have been doing this a long time, a lot longer than I have, with that in the back of their head, that, you know, they're impacted whether they offer this product or that. Mm-hmm. You know, that subconsciously can affect how you're building a portfolio.
Right. You're not even doing it on purpose. It's a subtle, or just even you don't know you're doing it, but you do it because you feel like it's the right thing to do, but maybe it's not always the right thing to do to act on a commission that you're going to get rather than that flat fee, right?
Exactly. And first and foremost, we want to be unbiased when it comes to managing a client's investment. That's the, you know, one of the number one things. We don't want to choose a certain product over another because of the way we're structured. We want to truly analyze the data and let the data speak for itself and really construct portfolios that way, versus thinking about cost or revenue. And that goes much further than just commissions. That's a lot of different ways of how the business can be structured. And I think we've made some significant changes to ensure that really thinking about either revenue or cost doesn't come into the equation when we're taking care of a client's portfolio.
Give me some success stories. What can I say? This is what Lefavi Wealth has done for these people. Tell me.
I like to think that we do things differently as far as the services we provide. Really, at the end of the day, what we really provide clients with is security. And you know, I've heard over and over from clients that really, you know, they don't know what they would do without us, right? They don't understand or have the desire to manage their wealth. Maybe they don't have the time, but really the people that we help are a lot of blue collar workers, a lot of blue collar folks that, you know, have saved a tremendous amount of money, and maybe they were in farming or, construction or something of that nature. And this is their nest egg that they're trusting us with. This is everything they've saved. That's something that's top of mind for.
You're the one that's going to tell them when they can retire or not, right? I mean, truly, yeah, there's a law about when you're supposed to retire, but you have to be able to tell them that information.
Right. And so I promise I'm getting around to the answer to your question here. Oh. But I know that's exactly what they want. They want to really feel like they're safe and secure. And so it's one thing for an advisor to say, well, look, just trust me. I've got these fancy degrees and I've got this experience. And so you just trust me. I've run the numbers. You're going to be just fine. That's one approach. And I feel that's an approach that's often used in the industry because it's more cost effective. That's a 3-minute conversation, right?
Just trust me, really.
Right? Just trust me. So the way I'm wired is I want to really see and understand why I should trust you, right? It's like trust but verify.
Right. And you have to earn it.
Right. And I don't, I expect that our clients have that same standard. And so without them needing to ask, because most of them, wouldn't ask us to do this, we really proactively reach out to clients and really try to get them in for a financial planning session. This is what we call it. And a lot of clients will say, no, I don't need that. That's not necessary, et cetera, et cetera. Financial planning can sometimes be a practice that's associated with bad things, with trying to move more money over here. Let's look at your outside accounts. With trying to sell an insurance product, it's used a lot for that. We truly use it just so that we can, with the client, understand how everything is structured, what their whole financial situation looks like. We use a software program that essentially forecasts everything out. So we take everything we know today, we take the best estimates on how those different parts and pieces are going to move in the future. We put that into the computer, let the computer do the work, and it really kind of shows us, here is the most likely scenario. Here's the least likely scenario. Doing that with a client is powerful for a few reasons. First and foremost, it really provides the client with a sense of security. Now, instead of saying, well, just trust me, we've put all the facts in. We've used the best
evidence-based to say, here's the evidence of what past performance has done and what we predict for the future to be, right? And so now you've got this model that can help them understand, right? Not just trust you, but now you can trust but verify.
Exactly. It's the verify stage. And so we're using our best estimates that are available for how things will perform in the future. And of course, 2020, as uncertain as a year as it has been, it's no different from any year prior. We still can't predict the future, right?
Right.
In that sense, it's the same as 2019 and 18 and every year before that. We're never going to be able to predict the future, but we're using the best estimates we can with the client, explaining those estimates, explaining why we're doing it the way we are. And what happens in those meetings is the client leaves feeling very secure, very safe. They leave with a better understanding of how things are structured in their own personal situation. And that's everything from taxes to inflation in the future to how the investments perform and those things. We typically spend 2, sometimes 3 hours with clients. It's however long they want to spend with us and really dig into their situation. And so they leave with a better understanding of how their financial world is structured and what they can expect in the future. In addition, we get to learn more about the client. So we take their, this process is a few steps long, but initially we take all their base facts, we call them everything we know about them today. Then we're going to plug it into the model. We get to look at different scenarios, potential scenarios in the future. What happens if I have to go into long-term care? What does that look like?
Right.
What happens if I buy, this house over here and sell the house I'm living in? What happens if I sell my rental property? There's all kinds of scenarios that are unique to people. And we get to build those scenarios into the program and really get a really good understanding, again, letting the computer do the work. Trust me, that's a much better situation than me with a calculator and a piece of paper.
What, you triple major in all things financial and math and economics? No, I get it though. Computer models are great for that.
For sure, yeah. The computer can look at all kinds of variables simultaneously. So we get an understanding there when we're analyzing and building out the financial plan. And then when we actually go through that plan with the client in the conference room, we've got this big, beautiful smart board that we absolutely love. It's like 85 inches and touch screen. And so we get to really use that to present to the client what these things look like. And the clients, it was remarkable. We were pretty surprised, all of us, at how engaged the clients were. What we found is that through these financial planning sessions, really educating them, really explaining how everything works, they're so engaged, and they ask these brilliant questions, and they really are learning it, with us. And then at the same time, we're learning about them. We're learning about what matters to them, what different, there's all kinds of variables and components of a financial plan. And you might ask a client, well, what's your goal here? What's the ultimate outcome that you'd like to see? And the client might say, well, I really just want to grow this for my beneficiaries. And another client might say, well, I want the check to bounce for the funeral home. I want to spend every last penny. But when we're in the conference room, we're going through this together. It's very telling if a client is asking 7 different questions about the money that their beneficiaries are going to receive and how that's going to be transferred and what are the taxes on that and what can I expect as growth. If they ask 6 or 7 questions on that, it's obvious and apparent that that's a huge deal for them.
Right.
And so we kind of get to learn about where the clients are.
And can get pretty emotional too. I could only imagine, right? I mean, you're not only dealing with people's finances, but you're dealing with their emotions and their transition in life, right? I mean, that's pretty big to take on.
We're dealing with not even just their finances, but we're dealing with, again, every penny they've saved over the years. They've worked their whole lives to build their wealth, right? And we're just helping them with that. They're the ones that have really earned that money, and so it's very emotional. It's a lot more than just this is how much money I have in an account. It's like everything I've saved and worked for over my whole life. And
they're putting that trust in you to make sure that you're doing what's going to be the best outcome, and you're basically changing the trajectory of these people's outcomes based on those conversations that you have and what they might choose to save or not save or do or go or, when they retire, right?
Right. We know that they have so many other alternatives, and we understand the level of trust they're putting into us. And we're not perfect, but, we can work every day to improve what we do, how we do it, and just try as hard as we can to give clients consistent, excellent service. We're grateful for each and every one of our clients and for that opportunity.
That's awesome.
Serve.
Let's talk a little bit about some of the marketing tactics that have seemed to be working for you. What have you seen that has helped you really build your brand and your bottom line with some of the tactics and strategies that we're implementing with you?
Social media actually is kind of top of mind there. I think that one thing that we were definitely lacking before that you all over at Peppershock have really helped us with is our social media platforms and the marketing there. I can't believe that we have any growth there at all because it's financial services. It's wealth management. It's the most boring thing on your Instagram feed.
Unless we can make it where it's truly impactful, right? I mean, there's definitely
and that's what I'm saying is that you've given us a personality on these social media platforms, and we've seen a tremendous amount of growth in followers and in interactions with the posts and likes and all those good things, and that's going to be really important for the next generation. Millennials and those generations after them are going to be our clients, hopefully.
Right.
And so, that's going to be, I feel like that's a huge building block towards the future.
Let's talk about who is your ideal client. I mean, you've served Lefavi's served many, many clients over the years, and they're, some of them are, I guess what we'd say, maturing, but the next generation, like you said, I mean, who is it that you want to serve most? Like, if you were to paint a picture of your most ideal client, what would that look like?
I think that everyone can benefit from what we do. Our ideal client is someone who doesn't have any desire to manage their own money, which studies have shown that when you manage your own money, the average return that those folks seek is much lower than having someone else manage your money.
Right, because there's so much emotion involved, and and plus, then are they experts at managing money? No, but are you? Yes. So it makes sense to hire that out to somebody who can do it better, right?
Right. I appreciate that, Ray. I mean, I do, but to be honest, you hit the nail on the head with emotion. The fact of the matter is, when you're managing your own money, you sometimes there's a tendency to make bad decisions when things get really rough. But definitely the ideal client is just someone who has no desire to manage their own money, and there's a lot of people that do have that desire to manage their own accounts. They say, well, what would I pay you 1% for if I can do it myself?
Mm-hmm.
In fact, my grandfather was that way. My grandfather, who I was very close with, he kind of despised wealth advisors. He said, why would I pay you 1% to manage my money when I can just do it for myself? And he earned phenomenal returns over the years.
He was probably abnormal, I have to say. I mean, because not many people can do that, right? On their own.
Well, here's the end of the story. He earned phenomenal returns over the years, and then 2008 happened.
Oh, right.
And he didn't provision for that. He didn't have, at that time, my grandfather and my grandma were living off of their portfolio. My grandfather was an orthodontist, and he had done well for himself, and had done, again, he did a great job just managing a small stock portfolio. But then 2008 happened, and there were just a few things that he didn't really know, and on top of that, it wasn't even that as much as it was the emotion of it. It was extremely hard for him, and there were some bad decisions made, and it really significantly hurt his portfolio to the point where it was a long-term impact for sure on their wealth, and that's what we seek to avoid.
You want to do things to help weather the storm so that you're not stuck in a position like that, like your grandpa. Yeah.
Right. We know that we can't predict the future, and we know what we don't know, and so really just adhering to a long-term disciplined investment strategy is really the best thing that we can do, and ensuring that clients have income in those tough times that we know will hit.
Mm-hmm.
We're not surprised with this market downturn. Are we surprised by the pandemic? Of course. It's always a surprise what caused it, but it's not a surprise that we have these recessions and market downturns. That's consistent throughout history. So, that's really something that we provide, is just someone who's unemotional. I didn't build that wealth, and it means a tremendous amount to me that clients trust us with what they have, but I'm not emotional. I'm not emotional about their accounts. I've studied what
you're the expert. You're not the emotional, baggage that comes with managing your own money. You can set that aside and then just focus on the facts and focus on the results, right?
And to be quite candid, I mean, I don't manage my account the way that I manage clients' accounts. If I'm fortunate enough to build wealth over the years, I truly will find a great advisor to manage that for me.
Hey, even coaches have coaches, right? That's what they say.
Yeah.
even the best of the best, right? Michael Jordan had coaches too,
Right.
It's true.
And it's not that. I'm most certainly not the Michael Jordan of managing money, but I appreciate that again. But no, I mean, it's really the emotional aspect. I'll keep a little side account to play with for fun, but I'll let someone who's unemotional and who's doing this every day manage my money when I retire. And it's consistently been studied, and it's a consistent outcome that the folks that manage their own money earn roughly half the return of someone who has an advisor manage their money and pays them, an average fee of roughly 1%.
If there are people out there listening that haven't gone down this path before of finding a wealth management company, what should they do?
They should be looking for, and I say this to everyone, I mean, regardless of whether they want to work with us or not, I think that it's extremely important that the firm first and foremost is independent. And so what that means is not to take shots at any competitors. I don't want to disparage any other companies out there, but some of the bigger firms, those firms are not independent. Those firms are conglomerates that have many different lines of business related to finance. What Lefavi does, we just provide financial advice. We don't have our own funds. We don't have any arrangements with any third-party funds where we receive any kind of revenue from them or anything like that. The investment advisor is truly independent of all of that. We don't have banking products. We're not going to offer you, a mortgage on your.
And that's where you can be in your role unbiased in that scenario for sure.
Exactly. And so at some of the bigger companies, you don't have that. You'll have an advisor, and they're typically a lot of pressure in different ways. It could be their pay. It's almost always partly their pay. And then also just pressure from the top down, even if it's not their pay, even if, they don't earn a cent on the money they manage, they're just paid a salary. Well, if they want to be promoted, they're going to be pressured to use certain funds. They're going to be pressured to maybe use insurance products that the company also offers or banking products. That's going to be your star advisor that's promoted. And then there's companies that just, they're only going to use their own funds. You might not go to a bigger company that also is known for index investing or ETFs and low-cost mutual funds, et cetera. If you go to that company, they might offer some great funds, but that's going to be 100% of their portfolio versus at Lefavi, where we're going to say, well, if this company here has the best mutual fund, we're going to use that in that area. And that might be the only fund that company has. And they've got every fund that you could imagine across every different type of asset class. But we only just want this one for large cap, U.S. large companies. Mm-hmm. That fund outperforms all the other funds in its category. It works well with our portfolio, but that's the only fund from, company A that we use. If company B has 5 funds that, fit different categories, we'll use those. So we're completely independent of the fund companies, of, the investments we select. And then also, if we, in the rare instance that we actually recommend some kind of insurance, we're not paid a commission on that. We're not affiliated with that company. It's truly in that client's best interest. And so being independent is huge. I also think that being fee only is important. Mm-hmm. There's definitely ways to do commissionable products and have a different structure and do that in a way where you really are still independent and unbiased, but it's few and far between. A lot of the companies, especially some of the bigger companies, that do use commissionable products, that can just be problematic for the client, for the investor.
Do you see others changing more and more, going to a flat fee based as opposed to a commission? Is that happening more in your industry now?
Yes, I think it definitely is. There's still quite a few companies that are not truly fee only. And in that same sense too, the problem with the word fee only is that it's not defined. And so it can mean many different things, and advisors can hold themselves out as fee only, but also have a third party broker that they interact with, and their reps can sell products and earn commissions on those. And they say, well, we're fee only, and it's the advisor is fee only. The investment advisor is the entity, is the company. Mm-hmm. That entity is fee only technically, but you have this third party over here that when you sell their life insurance, they're paying the rep a commission.
Yeah.
And so they can technically still call themselves fee only, but they're not truly.
It's tricky.
Right. Right. Mm-hmm. We're also, fee only in the sense that our clients don't pay any custodial fees. So, in our industry, we have a custodian, essentially a bank that holds the assets in the client's name and will facilitate trading, statements, tax reporting, a lot of back office needs.
Administrative kind of things, right. Yeah.
The majority of advisors just pass that fee along to the client. What we've done recently is we cover 100% of that fee. The only fee that the client could realize is a wire fee. $20 wire fee. And in almost every instance, we're going to cover that for the client anyway. So it simplifies things for the client. They get their consolidated quarterly statement from us listing their fee. And that's really their all-in cost to Lefavi. Of course, the mutual funds have small fees, expenses, and that's just something that you can't avoid.
Right.
But to Lefavi, and to really, in their mind, to really do business with us, it's all just consolidated in that one fee. So.
Oh, good. Okay, 2 more questions for you. Ready? Okay, number 1, if people wanted to work with you, what would they do? How would they get to you?
We actually, because Bruce was on the radio and it was nationally syndicated, we have clients in many different states. We've got clients, on the East Coast in Florida, New Hampshire, California, really just coast to coast. So I would say the vast majority of our clients are here in Salt Lake, but we have many long-term clients that we've just met with virtually over the years. And there's nothing we can't accomplish virtually that we could accomplish in person.
I mean, he could do that virtually before virtual was a popular term because of, pandemic, but that's pretty, over the phone call, right? I'm sure.
Right. Or we just go to meeting and that. And so, we can work with anyone, anywhere. And the best way to really get in touch with us is to give us a call or, shoot us an email. You can go to lefavi.com and all of our contact information is right there. Or if someone would like, they can absolutely email me directly.
You can spell out Lefavi for those listening right now.
Of course. It's Lefavi.
Lefavi. Very good. Okay, last question. You ready?
I'm ready.
What have you accomplished that you're most proud of that you want people to know more about?
What is something that I've accomplished that I'm most proud of? I'm extremely proud of where I come from. I'm really proud to be a Penn Stater. I'm so passionate about that school. It was an amazing opportunity for me. I learned so much from some of the best mentors and professors, really, in my opinion, again, biased, but in my opinion, some of the best professors out there. So I'm super passionate and proud of that. This is going to sound corny, but I'm proud of what we do. I'm proud of Lefavi. I'm proud of the whole team here. We've got an amazing team of people who really just are all so passionate about what we're doing and what we're trying to achieve. And I think that's rare. I think that, that having that kind of a culture here is rare. And so I just keep getting lucky. And I've gotten so lucky with this team of folks who really want to each and every day improve what we're doing. They all work extremely hard and they're all really behind that vision of let's just get better each and every day. Let's just improve the operation a little bit each and every day and continue to do that forever. Because, in business, if you're not moving forward, then if you're in neutral, you're moving backward. So we know that this is a competitive space and we're passionate about what we do and the service we provide to our clients. And I'd have to say I'm most proud of the team here and what we're doing.
And you need people to know about that. That's awesome. Good job. I'm proud of you too. All the things that you've accomplished within the short time frame we've known, after the few years that we've been working together. And I think it's fun to interview you and do videos with you and, share your team and the website bios and all the things that we work on together, right? And it definitely shows, and it's very apparent that the team and the culture that you've built is strong and can weather this storm that we're going through now and into the future. And so I think that there's lots of good opportunities yet to come that we're still getting to work on with you and see that, in 5, 10, 15 years from now, right? It's going to become even more. And then maybe you'll have your own podcast as opposed to the radio show, right?
Hey, you never know. I'll say that likewise, it's been really great working with you all and getting to know you guys. And definitely you're obviously in a business of trust and in a relationship-based business. And so talking about getting on a podcast, I think you're the only person that I'd really say, okay, yeah, let's do that.
Well, that's awesome.
You guys are great to work with, truly, and you're really easy to talk to. So, you did the video interview with us here, and we're doing an interview now, and I think you guys are great to work with. So,
well, thank you for that, for sure. That's awesome. See, we get our own testimonials. See, testimonials are great. Thanks, Stu. I really appreciate that. All right. Well, let's wrap up. Any other final thoughts or anything else that you would like to share with our listeners that I hadn't already poked and prodded at you?
No, nothing I can think of. This has been fun.
Awesome.
For sure.
All right. Well, thank you for joining me and sharing a bit of your story and your marketing journey. And to our listeners, thanks for listening. And until next time, enjoy the journey.
Thanks for listening to the Marketing Expedition podcast. Find more online at peppershock.com. Wouldn't it be great if there was one place you can go to get all the latest information and tips about marketing and advertising? The Marketing Expedition community is that place. People like you gather in our online community to build relationships with others and find the latest marketing trends, tactics, tools, and technology. We help you build your brand and your bottom line. Start your adventure today. Visit themarketingexpedition.com to find out more.